Hey, Chris,
Yeah.
how do I know when I actually need a company instead of staying as a sole trader?
Well, generally that's fairly good news because your side hustle or your little business is actually doing well. And it starts to mean that you're actually making money, you're paying GST, you're thinking about employing people. Also, you got to make sure that if you're doing this as a side type business, it's not interfering with your job. So there's a lot of indicators that setting up a company is a good way of actually keeping that separation, reducing your tax, and also capitalising on the fact that you are making some money about what you're doing, and that's really a good reward for all that hard work.
But I've heard that I need to be making at least 75,000 in revenue. Is that correct?
Well, $75,000 in revenue is the trigger for GST. So if your sales are below that, you don't have to register for GST. However, you look at it and you go, well, if I've got a lot of equipment in there and you register early, which you can do, you're going to get some nice refunds. So it's not always GST is a bad thing. Quite often, if you're starting a business and you're buying a lot of equipment to get it going on the side, then you can claim some big GST refunds before you actually start making that 75 grand.
So it's not really about the profit then.
Not really. I think making the profit is great, and if you're making good profit, you can limit that to 25% tax. You might still keep your job for a period of time, and you might be making your income could be higher than you're paying higher tax. But it's a risk protection mechanism. So in the event that something does go a little bit sideways, it's the risk's quarantining your company, not you personally. So you're not putting your personal assets at risk.